All right, good morning. All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. A little bit of chop in the market, continuing going on here. What else is new? But let's get to it and do what we got to do here, and then we'll go take a look at some FXI. Talk about a trade setup here with the FXI, which is the Chinese ETF. For those looking to kind of play some of the trade war talks here, that will kind of really kick off here tomorrow. One of the reasons why the market's up a little bit here today is simply because China came out and said they'd be willing to do a partial deal. And, that's something we've talked about for a while. We're probably going to get this deal done in piecemeal, right? It's going to be a little bit here and there, for the next several years, and that's just something the markets are going to have to adjust to. But let's start off with the challenge. Let's start off with the position that we're in, Walmart. And Walmart is sitting here at 118.71. If we come into our trade data, 118.71 doesn't get us anywhere. We're not near our stock exit level. We're not near our profit level. Let's take a look at the option value here. Looks like the option value is 310. So, nothing to write home about, right? We saw what after it got in yesterday. We saw the market tank, and it dropped Walmart down a little bit, and then we saw the market rebound here this morning, and it's kind of chopped Walmart back up a little bit here, but essentially unchanged since we entered, and the chart looks very similar, right? The chart looks very similar here, to what it did, and all the same elements that were there yesterday, continued to be in Walmart here today. But it just goes to show, there are no stocks that are just immune to the chop around. Eventually the indexes, when they move, it drags some of the worst stocks higher, drags some of the best stocks lower. We will continue to see that as the markets themselves oscillate. All right, so nothing to adjust with Walmart, but we do have cash available for a new signal. Now, there's not a new signal on the board here today, but there's some potential out there. And you're going to see some of these names on this list look very similar to some of the names on the list yesterday afternoon. In fact, 5 of these are exactly the same: Kohl's, Visa, Valero, Vulcan, and Walmart. Right? These all had upside 3-7 crossovers, about 90 minutes before the market closed yesterday. They all sold off into the close, right? So they didn't end with those crossovers. But with a little bit of rally here this morning, they have renewed crossovers on them. We could see a signal come in here out of Visa. Very interested to see how that settles out here today. But we have American Airlines and Arconic that are new on this list here today. And if we come in and we look at American Airlines, you can see what this looks like. Very, very interesting chart. Has the fresh 3-7 crossover on it. Consolidation risk is a little too high right here, but finally has a higher low. This is the first time in a while that, American Airlines has had a higher low. And we had this kind of really high volume flush right here. And today's action is completely erasing that finally. And so very interesting setup. It's still trading below the 20-day moving average, and the 20 days falling. We don't have to stoke 39.1 over 50. So there's still some, danger elements here associated with it. But a very interesting setup, to say the least here. Now, American, unlike a lot of stocks, we're going to be hitting on earnings, right? American Airlines has earnings in 2 weeks. Now, for the challenge, right? Earnings aren't going to stop me from playing. Let's say American Airlines were a trigger today. They're not going to stop me from playing it. I will play it. I won't hold over earnings until the challenge is up to $10,000. So, at that point, I'm willing to hold over earnings. So, willing to play it ahead of earnings. I would just cash out. Regardless of the time stops, regardless of the price stops and all of that, I'd cash out the session before earnings. So, for American Airlines, that's a morning when they report earnings. So I'd have to cash out the afternoon before the earnings. But not anything to worry about with American right here, right now. But I'm sure we'll run into that situation with a few things. And then we have Arconic, and Arconic's been one of the best stocks this year. Just been one of the best performers out there in the market this year. And, you look around what's going on in the sector, what's going on, economically, you say, well, how is this one of the best performing stocks out there? But it has been. It's been one that has signaled a few times over the last, even the last challenge. We had a few signals. The options were just absolutely disaster, terrible, here for it. So we weren't able to play it. But does have a 3-7 crossover on it today. Consolidation risk is pretty high on it. So not sure that it'll signal here today, but does have that crossover action. We'll see how that shapes up here into the close, and how that kind of washes out with things like a Visa, things like a Valero, things like a, Valero we talked about yesterday. Just such a nice move on Valero today. So anyway, we have those coming in. Now, on the downside, again, we've been in this market that has, upside and downside crossovers going on a lot, but not a lot of creating signals. But we have 3 on the downside here today: J&J, Netflix, and Verizon. If you look here, J&J, this had this kind of really nice pop right here. Gave us a 3-7 crossover, but just isn't, good enough for an upside signal. We're now getting a downside, crossover here at a very similar level to what we saw the downside crossover at the end of September. So I'm very interested to see what the consolidation risk here is on it as we get into the end of the day. I'd love to play J&J lower personally, but consolidation risk here this morning is simply too high. Then we have Netflix, which made a really nice bounce off of these lows here in September. Had the upside crossover, but did not give a bullish signal. Now has a downside crossover on it. We could be looking at a bearish signal here by the end of the day here for Netflix, but probably not something that I can go out and trade, as if we look at Netflix options, the pricing of the options kind of puts us out. So, for the November option, it's, $17. And part of that is because they do have earnings, I believe next Wednesday, if I'm not mistaken. So, puts the pricing out of our range, at least for the challenge for now. Later on in the challenge, Netflix will come into our range. And then Verizon, which has kind of just had this chop back and forth, high consolidation risk on the downside move, on the upside move. And, we have a downside 3-7 crossover today, but consolidation risk on it very, very high. So those are the stocks that are on the scan. So I'm running with Walmart, and we'll see what signals here by the end of the day. And I wouldn't be surprised to see a few of these ultimately turn into some signals. Now there's a stock out there, the FXI, and the FXI is the Chinese ETF, and more of the large cap names there for China. So we don't see it trade exactly with the Chinese market, right? But it does for the most part. If we pull up the Chinese market, the SSEC, you can see what this looks like. And let me take off all the indicators. But here's the SSEC. And, had this nice move from January to April, really nice move up. And since then, it's just kind of, hovering, right? The FXI did something similar, but has, come back closer to the January lows than the actual Chinese index, all right? And a lot of that is just, fears over what's going on with the trade war, right? And between the U.S. and China. I know for those of us in the U.S., we always hear the U.S. side. We always hear, how it's affecting the U.S. and the danger factors for the U.S. But, there's a significant effect there that's happening in China as well. And so as we go into some of the talks that are going to start and kick off here tomorrow, obviously there's going to be the headlines, there's going to be the this and that and the other, and you know what, you have anybody and their dog out there on TV right now predicting what's going to happen. Great. It's just one of those things where I don't have enough information to predict how the trade talks are going to unfold. We've talked big picture, what they're likely to be, and I expect, little deals here and there. I don't think either side U.S. President Trump or, China. I don't think either side is in a position where they have to make a deal. But I do think both sides are in a position where they have to look strong. And, to come away with a partial deal and still look strong, to me seems like the path of least resistance. But, again, I don't look at this as, hey, there are overwhelming factors where the U.S. has to make a deal or China has to make a deal or China simply doesn't want a deal right here because, you know what, they're going to get a better deal later. It doesn't, we don't see it shaping up that way. And so, how do you play it? How do you kind of play some of that uncertainty, some of that unknown? Well, one of the ways that I'm looking at it, and I haven't pulled the trigger yet, I'll look at pulling the trigger later on today, but is here at the FXI, right? Why? Well, U.S. markets are going to react to any kind of trade deal or non-trade deal. They're going to go up or down, right? Are they going to go up or down as much as China on a pure percentage basis? Probably not. So I look at it and I go, I could probably get a bigger move in some of the Chinese names. We have seen that, here in August. We saw the FXI really go from, 43 down to 37, make a 15% move. U.S. markets didn't move that much, right? We're talking about a 3 to 4% move here in the U.S. when China's talking about a 15% move. So I'm going to get a bigger move. Now, the options obviously price in a little bit of a bigger move, and rightfully so. But, is there a cheap way to take advantage of this and possibly get a really nice reward if it goes my way? And if it doesn't, well, you know what? I don't have to worry about it, right? But here we go. 42 is what the high was in September for the FXI. And 43 is kind of the highs we saw in June and July. And it overshot a little bit. But, can I realistically say that the trade war outcome or the trade negotiation outcomes over the next several weeks could push the FXI into the 42 to 43 range on a bullish resolution? Yeah, that's pretty easy to say, right? That's not crazy talk. Can I see 38 and 37 coming into play? If things erode, if things get bad? Well, absolutely. Right? That's not all that far-fetched. I mean, it could be down there in 3 days. So we have some nice little ranges here that aren't far-fetched. And so can we go and get a decent price on these ranges for a call or a put spread, right? And so I'm going to pull up the options here for the FXI. And what I'm looking at is I want to give myself some time, but I don't want to pay a lot for time. But let me take a look at this range, the 42 and the 43. So if we come down here, the 42 calls are going for 40 cents. So if I want to go buy these 42 calls, I'm going to pay 40 cents. The 43 calls are going for 20 cents. So what can I do? I can buy the 42 calls and I can sell the 43 calls. What will that do? Well, that'll mean that I have to net debit about 20 cents. It's going to cost me 20 cents to get into this trade. What's my max reward potential? Well, I can buy the stock at 42, sell it for 43 if the stock goes above 43. So my max reward potential is $1. Now, if you've ever traded debit spreads, it's you're probably not going to be able to get out for $1. It'll be more like 90 cents, 94 cents, somewhere in that area. But essentially I have a 4-to-1, 5-to-1 payout ratio here for something that's not, all that crazy. I could go look at the 44 to 45s, and I could get into this maybe for 5-6 cents and get a 10-to-1 payout ratio. But I'm kind of getting into a little more crazy territory of 44 and 45. Is it possible? Yeah, it is, right? It is. So it's one of those where, these debit spreads, they're not unreasonably priced. They pay out pretty well for a fairly cheap, monetary outlay. And so that's what I'm looking at. And I haven't decided. I'm leaning towards the 42, 43. I may do something like a 42 to 43 and a half, or a 41 and a half to a 43, where it gives me a $1.50 reward potential. But, anything in there, you can kind of look at it and go, well, you know what, how much am I risking? What's my reward? And, your reward is the difference between the strike prices. What you're risking is the difference between, the two option prices. And, you can make a decision and say, all right, I want to go with this one, or I want to, go with that one. Here on the upside. Now, on the downside, if talks break down, right, 37, 38, that's not crazy territory. So let's come in here and look at these. 38 puts are going for what, 32 cents? 37 puts are going for 20 cents. So you can get a 38-37 put spread for about 12 cents. That pays off better than that call spread, right? That definitely pays off better than that call spread. And, you don't have to make a huge outlay. If there's a big drop, it's not that, you're going to see those options, appreciate in value very nicely. And if you wanted to get something that's a little more similar to the call side, you can even come in here to the 38-39 area, pay about 22 cents. And 38-39, we're looking about right here. Now, with those option prices, I do want to double check that there's no dividend payout coming up here or anything like that. These ETFs, they do have some payouts, so they will get adjusted from time to time. The adjustments normally aren't all that great, we're not looking at a huge magnitude of adjustment. But let me just double check here. That's something I always want to do before looking at buying a spread, because it does affect it. And it looks like, it's not going ex-dividend again till December, and it's only 44 cents. So nothing that I have to worry about with these options here. So, it's one where I could put one on the call side, one on the put side, and really kind of play and say, well, one's going to go worthless, one's going to make pretty good money, and cover the one that goes worthless. And so kind of doing a reverse iron condor type of a dealio here, if you want the option terminology there for it. But if you're really opinionated on which way it's going to move, and you really think it's going to move one way or the other, this is just a fairly cheap way to get access to it, to be able to play it without having to put a ton of money out there, and still getting a pretty good reward potential with it. A lot of U.S. equities, a lot of U.S. stocks right now, they have earnings priced in if you go out this long. So you're not getting as good of a price, with the spread. For example, Caterpillar, which is a great way to play the trade talks. But if you come out, earnings are priced in here with Caterpillar. So, 125 to 130 is going for, a little more than $1. Is 125, 130 that realistic for Caterpillar? Here's 125 right here. Here's 130 up here. So, it's not crazy. You can go play the 125, 130, and then, also get earnings associated there with it. I can't argue against that. But that's kind of the mindset of approaching it and saying, all right, where can I pay the least and get the most bang for my buck going into these trade talks. So if you're itching to play it, those are the areas that I'm looking at, because, well, I have a little bit of that itch. I always do. But again, if you're going to scratch the itch in this manner, realize, there's a decent chance you have the option go to zero. And, if you're the type of trader that just hates options going to zero, this isn't the type of trade for you. But if you don't mind that risk and you're willing to just put what you're willing to risk and go, this is the type of trade setup that tends to pay off the best, ahead of events like this. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on with you here this afternoon, and we'll talk to you then. Take care.